Let's straight away head to another set of numbers that just hit the screens, and that was the numbers of IL&FS Transportation. Joining us now is Mr. Mukund Sapre, the Executive Director of IL&FS Transportation. Mr. Sapre, if you can take us through the numbers. I have just got the P&L with you. While the revenues look tidy, so do the rise in expenditures. Can you take us through the rise in revenues as well as the margin picture?
Yeah, if you take in comparison to last year console, I think we are showing around 66% of rise in our revenues, which is around 4,127 crores for the year, and in terms of EBITDA levels it's around 1,234, and PAT we are touching around 433 crores, which is 26% more than last year. I think we need to take into account that as last year we had lots of project awards, and now practically all the projects are going to rather come on ground. That's the reason that our borrowing or interest rates and interest things have gone a little bit up, but that's the normal project cycle for a BOT developer. That's going to happen.
So if you can detail for us what the Q4 performance in specific was, because Q3 saw about a 17% degrowth. What's been the picture this time?
At console level, Q4 was 1,681 with at level of 159 crores. I think Q4 was where, you know, all these accounting standards call for the threshold levels that you need to approach around 10% progress more on physically on the ground, and that's how the revenues accrue. And that's the reason that most of the projects which we had started on ground really caught up that magical number of 10% in accounting sense, and we could recognize the margins and revenues out of that.
So couple of projects that got completed in Q2, the Gomti project and the Hyderabad Outer Ring Road, that didn't get accounted in Q3. Did that get accounted in Q4?
No. What I am saying is that the projects which are being executed on the ground, and that's the threshold level for accounting standard AS7 or something, where they acknowledge your revenue incomes or development income. Yeah,
I get that point. What I'm trying to say is that there's been a quarter-on-quarter fillip in your numbers. So the 10% accounting obviously boosted your numbers by a certain extent. Also, did the fillip come from the revenue recognition from the two other projects that didn't get accounted in Q3?
The revenue increase in terms of, if I take like my BOT and annuity collections and all, we are showing growth of around 10 to 15%. We were around 1.35 crores per day, which has gone up to 1.50, and this takes into account the latest additions also.
Okay. I wanted a word on your margins because total expenditure and especially construction costs have gone up considerably, both at the consolidated level and at the standalone level. It's almost a doubling actually at the consolidated level. Your total expenditure 1669 crores last year and nearly 3000 crores this year. What are your margins looking like?
See, technically, as we said that the business model also being evolved, and as we are saying that now we have adopted the development approach. So if you take various components which are contributing in totality, the development margins are a little bit lesser. So the EBITDA levels are streamlined at around 30%, which will be a normal thing now onwards we can expect, because if we take last year's performance, then the contribution from the project development activity was far more higher, and there the EBITDA levels were around 55 to 60%. But as we have said that we have evolved our model, and we are saying that we are going through a developer approach, wherein the concession company does award a total development agreement to ITNL, and then subsequently we get the construction done. So earlier it was flowing directly from SPV to the construction contractor, and today it's flowing from ITNL to construction contractor. And it does help us in terms of numbers also for us, and to qualify for bigger projects and all. It's a tax efficient approach way of doing, and that's the reason that difference you will find in the EBITDA levels.
So what perhaps on the interest costs of FY11 consolidated was 500 crores versus about 300 crores in FY10. You were looking to restructure some of your debt and get it on a fixed cost basis. Have you done that? What kind of improvement can we see in FY12?
On one project we have already done, which was the North Karnataka Express Limited. We could borrow at 9% fixed rate. We have refinanced the thing through an NCD through Deutsche Bank.
Yeah, that was 200 basis points.
And what is happening that, again, as I said, that our project development cycle, it will call for expenses, it will call for equity contribution, and all. Few of the equity, like I'm putting by borrowing, as we call it, the longer term working capital. That's the reason that numbers of interest will go up, but that's the cycle overall.
What are you expecting in FY12 by way of your toll revenues as well as by way of an increase in construction fees? Basically, if you can give us a revenue picture for FY12.
See, generally our board has directed we follow not talking on forward-looking thing, but technically I can say on one count that if I take into account the projects are hand, and if we achieve proper progress on this, we can report at least very healthy growth on these numbers what we are reported for this year, for the next year, and next to next year. So these 2 years definitely we will be on track. We need to perform on ground, and that's what we are concentrating to do.
Your revenues have moved up, from 2413 to 4,000, nearly a 1,500-1,600 crore jump. Can you maintain that kind of a run rate?
I think, yeah, definitely. That's what I'm saying, that
this
run rate what we are showing is going to happen.
Okay.
This has happened because of the model which we are adopting was a little bit different.
Okay, and you can give us some more clarity about your order book?
We have around 12,000 crores of the order book with us.
At the moment, and how does that compare to say year ago levels? I mean, is that a growth?
It was earlier like 15,500, now 12,000, and today's number I can say is around 9,290 crores the number, because this will keep on happening and depending on the project progress on the ground.
Okay. Do you expect that you will get a sizable clutch of orders? I mean, are there enough orders coming in or tenders coming in from the NHAI or other authorities? What visibility do you have in terms of how the order book will grow? Yeah, actually, if you see for last 2 years in terms of say percentage shares coming out of NHAI awards, we were clocking around 8 to 9%, and there looks a very good visibility. Only thing I keep on mentioning that there will be always a lumpiness on these awards coming. So today I think one big inquiry is there in coming few months, but then June onwards again is planned. So if you go by even last year's NHAI performance and the planning for this year, we do believe that we have to add on the further turnover new projects on this, and going on track record of past history, we do believe that we should capture around 5,000.
Some of your peers have been quite aggressive in this space. Would you be looking to be aggressive, or would you be maintaining a cautious stance and not reducing the NPV of the project below a certain extent?
I think we are a corporate driven company. Our shareholders are big houses and banks and all, so we would look for our threshold levels. Issue is that how carefully you plan and talk on this, and how selectively and how strategically you go on this. And I would say with all confidence that these sort of bids are one or odd bids which are coming, and if I try to analyze the competitors, most of them are done away with this sort of one or two odd bids. And we do hope that now we should stand a fair chance of really getting in proper numbers, and we are not going to compromise on not for this aggression because of the corporate objective.
Alright, sir, thanks a lot for joining us. So that was ITNM, fairly cautious, specifically after the IRB and what's happened to the stock price after that very aggressive bid they've done with the NHAI. So they're saying